Hey, what's good, guys? What's good, family? It's your boy MC Fire coming at you again with another video. Basically, we're going to be breaking down the basic tenets of rotation, why support and resistance matters, and how you can basically use it in your trading. Now, me and Q, are on our asymmetrical journey. So, taking necessarily these trades, like rotational trades, isn't necessarily something we do on a daily basis as regards to you know, doing calls or puts like you might see on a lot of other YouTubers do. We take asymmetrical trades based off a zero DTE approach, and we can get into that probably in a later video and breaking that down in that aspect. We talked a little bit of it in a previous video, but an in-depth is coming, so we're excited about that. But without any further ado, let's kind of dive in here. So we have here SPY, a little brief overview of what SPY is, right? SPY is basically the broader market. It's by the benchmark by which Warren Buffett said, hey, if I could go back and I could do it all over, I would just keep dollar cost averaging in SPY and call it a day. Save him time, energy, and money, right? But for us who want outsized returns, maybe with options, using leverage and a market approach that's not just buy and hold or dollar cost averaging, this I would say is the firmest way to predict price movement in its simplest form, right? Your job as a trader is to try to, based off market past, using news to predict future market price potential for an investment to work out, yay or nay, up or down, right? And in this, what we're looking at immediately in SPY is, let's just go over the last 3 days. So this is today. This would be Tuesday. This is Monday, right? And off rip, you could kind of see on that Monday testing of this yellow line and then testing of this white line. Let's get a big picture view. How does this actually really work? So each one of these lines, I've kind of laid them out. If you don't know what support and resistance is, I can kind of explain it in a showcase here. So just like here at the top, where price actually comes and reverses, we call that resistance. That is where price resisted the urge to continue going up and kind of formed a barrier at which it will reverse and go potentially back down. And then on the below that is support. This line right here is where previous resistance was, but that kind of formed the new level of support. So these ranges are where price and buyers and sellers step in, or the opposite. Let's say for resistance, that's what might be where sellers didn't necessarily step in, but buyers kind of got out of the way. Both of which would actually cause selling, right? And if you understand market theory about the bid and ask and the absolute fundamentals for market theory, maybe in a later video we go into that, but that is crucial. But really, support and resistance is bread and butter. It is how you understand rotation, system profile, all those things is absolutely crucial. So here up at the top, that's resistance. This is support. How do you put those lines on? How do you determine what is support, what is resistance? What I like to do is, let's say we are on a weekly chart. You work from left to right, higher time frame to lower time frame, right? I'll say it again: left on the chart to right on the chart, higher time frame to lower time frame. So weekly all the way down to 2 minute if you wanted to. Don't want to clutter it up too much. So let's just say, for example, we have the weekly, right? And in fact, we'll showcase how to do this with something like, XLU or wheat or XLB, something that hasn't been marked up. Let's do XLB. Seems really choppy, right? There's a reason for that. So what we'll do is I kind of have a aid here that assists you in marking up your charts, right? It kind of does it automatically. and it just makes the process a little easier. But this one's kind of already marked up. So let's find one. Awesome. BXP. We'll just take BXP. We'll go left to right on a weekly time frame. It hasn't been marked up like the other one, so we can go ahead and put our line. So off rip, we see that this is the low. We'll go ahead and put a line there. Boom. This is the high, rotational high, so we'll put another line there. And we're basically looking for areas where price reverses in a big way, right? So peak high, peak low. Also right here, you have some rotational levels, but if you notice, price likes to stop here too. So what I like to do is I will put the rotational level where it touched multiple times, but the outliers, I'll have those in yellow. The outliers here, just so I know, hey, heads up, this is a level that price has respected. It's not necessarily a level that it respects a lot, like maybe 1 or 2 times, but it did reverse and get tested there. Okay, really important to notice because you want to know, hey, excuse me, thanks for bearing with me. You want to know your major spots and your minor spots where price is necessarily making its rotations established, and where it could potentially reverse and it not complete rotation. So here we go. We got a high here, so we'll throw one up there at the top. Boom. And we'll have one at the yellow at the top. Okay, cool. So that pretty much almost takes care of the top portion of the chart. Remember, this chart is bottom left, top right. So it's kind of a negative trend here, but we have mainly most of the chart done on the weekly chart. And then we continue on doing support and resistance levels where there was some major pauses or multiple tests. And you see here, there's major imbalance, right? This 1 week was very explosive, and the next week followed through. It came up and tested this level that next week. So we'll draw a line in where open and then a retest, making another rotational level. Started building market orders, went imbalanced, fired off to the downside here. So, and our guide's kind of helping us out a little bit. But the next one, I would say, yeah, right there. That's perfect. There we go. Boom. Multiple tests here. That double touch here. And then we'll put another one to complete that rotation to the downside. Boom. This here, because it's peekabooed in rotation, it is a rotational level down here as well. Kind of peekabooed down here. And then started throwing market orders below. Came back up, same thing. We'll put a yellow. This is a perfect time to show where you can put a yellow. It went up here and got extended. So we'll make that yellow. Boom. Outstanding. So that's yellow. Rotational level established. Broke. Even pause here. Broke down. Continued. And formed a new rotation down here. Boom. Cannons. There. Another one here. On the low side. So there's that. There's how you mark up your charts, right? And it's beautiful because going left to right, a lot of these levels kind of overlap. They might not be perfect. That's why I like to use the auto-generated one and do really the more recent, maybe a leg up or a leg down and then stop there. All I do is just move these over or delete these and keep these for the more recent data. As you might see it with SPY, that's what I like to do. But now you kind of know how to mark up your charts effectively. And the most simplest format is super easy, and I like it on the weekly. So if we look at it on the daily, right, you could see off rip, these kind of make sense because you've taken the higher time frame, and then on the daily, you're just looking at days where it rotates up, rotates down, rotates up, chops, rotates up, rotates down. These choppy areas, I like to call that fair value, where market orders, if you know system profile, The VWAP, the volume weighted average price, it's kind of in the middle. We can actually show that if you like, without getting too much into the weeds here. I want to just showcase that part. So this purple line, I have a, I want to be a liar. You've got two standard deviations up and down. So the yellow line up is two standard deviations up, two standard deviations down. What does that mean? Effectively, standard deviations is if you see a volume profile chart. Actually, let me see if I can pull that up for you guys really quick, so it's not completely lost to you. Volume profile. Cool. Trading examples with a volume profile. What is volume profile? I just want to pull up a kind of a chart with volume profile on it. Of course, it's not wanting to give me that for free. Go to images. See if we can pull up a volume profile. Yes. Cool. All right. This is decent. Okay. So we've got what volume profile really is, and so this line right here is called the point of control. And when you look at your like kind of highs and lows, it's saying that this is your open, this is your low. But what are you really looking at? Volume profile in its simplest form is if I added up all of the orders at a certain price level and I made a tally or a tick at that price level, this is what it would look like. So the amount, I hope you guys can see my cursor. The amount from here to here means that there was fewer market orders at this price, 39.15. There was fewer orders at 39.15 than there were at this level or even this level at like a 39.10. We'll just go right here. There's fewer orders, that fewer transactions, right? People hitting the bid or people hitting the ask at this level, actual orders that went through, then orders over here. And then there was even fewer orders over here that went through over here at kind of this level. This is where the most orders, most people hit the bid to ask at that price level. Okay. So at that price level, within this, whatever period of time you're looking at, these people hit the bid and ask the most at this level, at where the yellow line is. That's called the point of control, meaning people are willing to, or people want to transact, do business at that price. Basic market economy, if you go back to Econ 101, how do you determine price? You determine price by the price at which people are willing to pay for things, right? So in the market, whatever your market is, people are willing to agree upon, hope, like by free market, this is the price where the most people found value, the most people were willing to transact, okay? And that's good. And then from outside of there, these two levels is kind of where people want to transact, and on down, right? At this price level, it's saying, hey, people were willing to transact up here, and if this is the highest point, this is the lowest point, people willing to transact. Now, what most people don't understand is basically you're just looking at a business. When people, let's act like this part, and we'll come back to this part, act like this part of the chart's not there. We're just taking the purple isolated part, like a perfect volume profile. Let's say, for example, if price gets up too high and you know not a lot of people did business at that price level before, what is price more likely to do? Price is more likely to come back down to where people know this is fair value. It doesn't matter what the market is, right? It could be iPhones, it could be tennis shoes. If I know my buddy bought an iPhone for $1,200, right? And I go into a store and the store is selling an iPhone for $1,700. You're going to be like, let me not get the price. Let me not buy that iPhone. Let me go see where my friend bought his iPhone. He bought it at a agreed upon price of $1,200. Somebody is saying, hey, I will agree to do business at $1,700. You're just not that guy, right? So, but let's say, for example, if price comes down here, right? Same iPhone example, if price goes down to $900, Then the demand kicks back up and like, hey, I know my friend bought his iPhone for $1,200. This place is selling it for $900. I'll buy there. But sellers might not be willing to sell their iPhones for $900. So the demand is high down there, but the supply becomes low. And therein is why people can agree, buyers and sellers typically can agree right here, right? Now, if we take that back to the charts in our example, in little spaces, in little pockets of time, price does the same thing where people kind of agree, right? And that kind of moving, if this was moving, the volume weighted average price is kind of that agreed point of control. It's kind of like that point of control if this was moving in time. If this chart was actually moving, it would be this. 2 standard deviations, let's say, would be the purple line at the top, purple line at the bottom, even though it's not, but let's just hypothetically say it is. And then the point of control is the volume weighted average price, right? Now, in a sliver of time, right, it's high, low, and middle, right? But as time moves to the right, the graph plotted actually moves with it. So it's saying, hey, this is your 2 standard deviations and this is your fair value if it was plotted further and further to the right. And what you'll notice too is, let me see if I can find a good example. At 2 standard deviations, let's say right here. I didn't cherry pick this, I'm just picking a chart here. At 2 standard deviations, you'll see that price likes to say, hey, we know it's a little extended. It will come back down and test fair value. It goes up. Price is a little extended. It'll test fair value in a rotational sense. Now, there is something that's called imbalanced, where the price is going from, I'm just going to mark this up pretty quick so you can see it, where it tests, comes back down to fair value, and then tests again, it starts building market orders, and then it goes into trend. That is called imbalanced, where it's going from a rotational state, going to test lows, test highs, test lows, test highs, test middle, test highs, stuff like that, to we're going to find a new range where everyone can agree because demand is actually pretty high. Supply is shoring up, so let's find higher prices. It's happening every day, every second in the market. This is a good example. It's kind of trending upwards to find a new fair value in the market. It kind of keeps trending up, keeps trending up until it finds some resistance where buyers are saying, hey, we're not looking to pay those high prices. But where does it go back down to? Where previously it might have found some support. Okay, if you're not willing to pay those prices, let's see if we can get you to buy and keep demand high. Comes down and tests and then settles at fair value. The beautiful part about that is that happens every day in the market. And you can play on that understanding that it will either test high, test low, or rest at fair value. Now, there's strategies for all three, right? We like the butterfly, and we like the fact that if we're using time to our advantage in the butterfly, the fair value sections is where price likes to hang out, which would probably give us the highest result for a center pin on our butterfly. But understanding this first is really key. Let's actually take that example for today in SPY. We noticed in SPY today, and we traded the XSP, which is the very small futures contract because we're testing this new system out. But we want to show you guys from inception to now that, hey, we're being 100% genuine. You're seeing it from the beginning. You're seeing it from inception, and we want to show that. So even today, right, we have our rotational levels laid out. We have our caution zone here. It stopped at the caution zone. Whoop-de-doo, right? That caution zone is actually from back here where it paused and it tested a couple of times. So this almost could be a full white level, but it stopped here. So shouts out to the caution zone there. Then it actually started trading up again. Now remember what I said. If it's testing a level, it can pause at fair value, test highs, and it did exactly that. We'll go 3 days ago. 1, 2, 3, right? Comes down, test this yellow zone, test this zone, or retest the yellow zone, and then goes to fair value. Or excuse me, let me rephrase that. Breaks above, tests the yellow zone, right? Tested the resistance and ends at kind of fair value in a center zone. Now we know after hours, we felt very confident in taking the call butterfly at the open, because if it's coming down to test fair value and it starts printing market orders at the top of fair value, meaning demand is picking up, then there's a high probability that it breaks that and tries to settle at some sort of fair value. And that's literally what it does. The halfway point, I consider that like a rough estimate of fair value. It checks in at fair value. Has no problem taking the stop up a pit stop right there at fair value before it ends up selling off and again tries to pick up demand, coming back down, testing this resistance level. Now, if it continues to build market orders down here at this resistance level, we could see it might break and test what? Fair value. It happens every single day in the market. And because we started on the higher time frame, we can see the highest rotations. Take it down to the daily chart. You can either take it down to the 4 hour, the 1 hour, but I like the bigger time frames because previously our mentor, we did plays that lasted 3 weeks. So we were looking for almost weekly to monthly triggers as opposed to daily or 10-minute, 15-minute triggers. That is crucial, but what we learned from all of our mentors, we kind of incorporate, and it makes us a better trader. The way I see the market now is completely different based off of rotation and imbalance, and how you trade it is also different. Seeing how markets come down, test levels, have no problem resting at fair value, and then testing other levels with an asymmetric approach is going to give you an edge. I truly believe that. That's what we're going to move our system on. We also believe in buy and hold because we believe in ownership and control. Shout out to Dr. Claude Anderson. And we bought some SCHD based off of a weekly trigger. Shout out to our mentor. So it's above the previous week's high and above the 8-period moving average. It did trigger us to execute a buy with potentially a 3-week follow through. So we're looking for a 3-week follow through. It is a buy and hold. It's just good to kind of showcase. Let's see what happens, right? So we effectively bought at break a high here, essentially, and it kind of did follow through. Actually, this will give you a very clear, right? So we bought on this candle, went up, came down, and kind of continuing. It is looking like it wants to continue its uptrend, but where is it going to come into resistance? Let's go to the weekly chart and find out. So real quick, if we look back, the next level of resistance is right here. Boom. Next level of resistance is right here. Right, kind of where it stopped. And then beyond that, right here. Next level of resistance. We are bullish, and then obviously the next level of resistance, if we're going left to right, not to look too far, is right here or even right here, right? So this would kind of correspond to the highs over here, and this would be like a yellow zone here. Boom, boom, make it yellow. So now we kind of got our plotted levels of resistance. Not really plotting support. It is a buy and hold, so we'd be looking to add if we get any pullbacks. But these are our levels of resistance. Like theory says, is just tested in multiple times where buyers kind of dried up or sellers stepped in. Either way, it paused at this level. And then from there, our next level potentially could be here. So hopefully it breaks through. Guys, if this has been helpful or you guys want a more in-depth on this volume profile, how it's derived, prove basically this theory that you're having us take on face value for us to build our trading core on, hit me up. I have no problem explaining that. We have a small channel, so it can, we can make it as simple as you guys want it or as complicated as you guys want it. Just let me know. This is your boy MC Fire. Thank you guys for your time. We appreciate it. We love doing this stuff, so we're going to keep doing it, baby. Have a good day and goodbye.